All right, so traders, you're welcome to weekly analysis with Coach Shedrach. Every week we come into the market to make projection as to how the week is going to be looking at, as to the move of the market, where is it the BS are bringing the market from, or the bulls are bringing the market from, and where possible are we seeing the market is going to be moving to. So exactly just as we did last week, we're also going to be doing the same thing today, right? But it's also very important, as I will always tell my student, always ensure that you look at your previous analysis. And after that, you've done your trading. At the end of the week, of course, you go through your trading analysis, you go through your trading journal and find out what were the things you did right at the course of the week, and what were the things you did wrong at the course of the week, so that you can be able to make your possible adjustment. So that's the same thing we're going to be doing right now. So we made some analysis last week, analysis on gold, analysis on EURUSD, analysis on EURJPY. And so we're going to be going into the chart right now, to see the outcome of the market with respect to the analysis we made, so that we can be able to, from there, make certain projection as to where is it the market is going to be going to. So we started with the market of gold. So this is the market of gold. What did we said last week? So last week, this was our projection. Let me bring it back to the 4-hour time frame. But then, because we are, of course, we make our top-down analysis from the daily time frame down to the 1-hour time frame, where we take our possible entry in the 15-minute time frame, 30-minute and 15-minute time frame. So let's go into the 1-hour time frame, where we say that, okay, we're expecting for the market to come and retest at this place. If you've not watched it, if you've not watched the class we did last week, or you were not in class, or you're, of course, probably you're not part of my student, so you were not in the inner class, right? So you could just go to the video I made last week. I dropped a video last week, just checked it. It's also a weekly market outlook of the week. So just check it and see. So let's look at what were the things we did last week. So we said that as at the course I was making that video, I think the price was around this level. So I said, I expect for the market to come and retest first before we take a bear move. And this was actually what happened. I actually put my position size, except that across the week, I was doing some analysis, so I had to remove it for one or two things. So I placed it here. I said, we expect for the market, if it come and retest this zone, we'll take the market down to this place. Down to this place. But ultimately, we're expecting for the market to come all the way to this place, ultimately. But then our first TP could be here, right? Then our second TP could be here. So using this place, for instance, we're risking, I think last week was 39 pips thereabout, 39 pips for 200 pips. So by extension now, because of course, market is not constant, market is always moving. So by extension, this is where the market, this is where the price of the market is currently. But this was what happened that last week. We said that the price was around this level. So I said that if the market, if BS bulls come and pick this market and retest it at this zone, and then the BS now come with an aggressive move. Of course, the moment it retests this zone, we're going to be taking our entry for a sell. And then this was what happened. So those who took the entry for sell with us, what happened was that afterward the entry, now look at what happened. BS pulled the market down to this place, expecting it to come and hit this place, but it didn't. That was about how many pips from there? That was around 66 pips thereabout, you know. So the bulls now came again and pushed the market all the way to this place, almost our entry again. And then before the BS now moved it all the way to this place. So it is still yet to hit our target, right? That's why we're still holding it. It's still yet to hit our target. So we're expecting it to. So between now to, say tomorrow, between today to tomorrow, we expect for, if the BS keep holding the market as they are holding it currently, we expect for the market to come and hit this zone. And if it hit this zone, so this was what I was saying last week. I said that if So in our 4 hours time frame, this is it. This is it. We said we expect for this market to come back here and retest this place. If it retests this place, this zone holds. So we're having this zone here. Also seeing that price has been doing something here, but this is a little bit minor. But then ultimately we have this zone and we have this zone. So if market holds at this place, we see some reasonable rejection and some candlestick pattern that is showing us reversal. From here, we can ride it up for another bull move. But then if it breaks this zone, we're ultimately expecting it to get to this place before we ride it up again. So right now for this week, what is it we're looking for? We're still holding on to the opinion of last week, since it couldn't complete the cycle that we expected for it to complete last week. If this market should come here and give us a retest here, we expect for it to bounce, except you see, that's why you need to join my class. You need to join my student and understand the reversal patterns I'm referring to, where there are reversal candlestick pattern that we see before we can see that at this point the market is about to reverse. Buyers are about to take the market away from the hands of the sellers, right? So if that happens here, then we're riding that for a buy. But if that does not happen here, we're expecting it to come and happen around this level. So that simply means that it is likely to come and retest this particular trend line. Is a break of the trend coming to retest it here. See, so in fact, we could even see it from here that the first time it retested it here, there was a bull run, a little retracement before this BMO, bearish move. So probably it is also coming to come and retest this particular trend. And so if it breaks this, then that means we're expecting it for it to get to this place. If it takes it from here, where we're expecting to take our sell, our buy to, so there is somewhat a trend line also here again. So before we take this buy, if it gets to this place, we expect for it to break all the way from this place first. Let it break from here, then we can now take it to this place. We're taking it all the way to this guy here, That's about how many pips. Always remember, don't raise more than 40 pips. Don't raise more than 40 pips. That's around 300 pips. So if we're expecting for it to break this guy here first, that's around 260 something pips. So that's that for that with respect to gold. So just watch out for gold. Gold can be very, very volatile. So you want to hold it. You want to keep it simple and you don't want to go aggressive on it. You want to keep it simple and you don't want to go aggressive on it. So that's that about that on gold. Let's go quickly into the next currency pair, say Euro USD. So for the market of Euro USD, you can look at this. For the market of Euro USD, this is what has been happening. Last week I said that we expect for this market to give us a W. The price was around this level, right? So I said if it comes to rebounds here, at this level, we're going to take a buy, a sharp buy. And that was what happened. So when it got to this place, we took this buy. And we said we're going to be having 2 TPs. First TP is going to be from here. So just go and watch the video and you'll see everything I'm saying here over there. The video before this. So we said here, our first TP here, that's 57 pips. Second TP ultimately should be 107 pips. That's here. Risking how many pips now? That 23 pips, risking 23 pips for all of that. So we've taken our first TP here, right? We've taken our first TP here. We're waiting for that which should happen. Probably this guy wants to, there's something that is playing out here. So this is what we are looking out for now. I'm done with last week checkup, trying to see this week outlook. This week outlook. Ultimately, what is it we're expecting for to happen this week? So this is what I want to see for this week. This market should come and break this guy. This market is not showing us a clear picture for a trend reversal, as though it is going to go bullish. Now, by this formation here, it is telling us that it's just a pullback, you know. It's just a pullback, and it is going to continue the previous trend. So this is just a pullback. If you look at this pattern carefully, you know that this is just a pullback pattern. So what is happening here is that this market might likely not get to this level, you know. So let's even plot in our, let me even check from the daily time frame what has been happening so far. So we see wonderful, wonderful weak rejections here. The buyers are taking over, but not really taking over. Then see this guy. If this guy closes bearish, then that means this market is already about to continue its previous move. But if it gives us an indecision candle, many things, it means two things. Either that the bears are about to go into the market massively, but or the bulls are still trying to take the market to a higher price level. You know, so from the 4 hours time frame, see this candle is telling us something. So from here you could see that it will be quite difficult for this market to continue to buy. So let's from here let's plot our, let's plot in our Fibonacci level. Okay, did it touch the, let me check, did it touch the 0.5 as a 50% fib level? Almost. So you know, there's still not a high level of clarity here yet. But you know, it might still want to give us, it might still come to retest this guy from here, test this guy from here, and then from here again, retest this guy, then boom, it continues its bearish move. So this is what I'm expecting to see. If this happens, I will go in for, I'll be going in for a sell here, right? Right away, I'm going in for a sell here. If this happens, if I see this pattern here, we're going in for a sell here, you know, just this, just take note of what I'm doing here right now. And then ultimately I'm taking it down to this place. So if you've been in my class before, this should not really be something difficult for you. If you've been my student already, this should not be anything difficult for you. Why I'm putting my TP here and why I'm putting my stop loss here. So that's that for that with respect to Euro USD in the first week, in the second week of February. This is what I am expecting to see. So if this happens, boom, I'm risking 13 pips for how many pips here? For 106 pips. Beautiful, beautiful, beautiful. So quickly, let's go into the market of EJ. So EJ had been giving us crazy move. EJ has been giving us crazy move. I expected for this market at some point to give us a retest here so that we can ride it, but that didn't happen. Now, this is what I'm trying to say. I was expecting from, well, it was here. I think 15-minute give will do justice to what I'm trying to explain. Last week I said it's either it goes down or it goes up. But then what happened was that it now later expected the bullish move. So while it was here, I was saying that if it go, this was me to my student. I say if it comes to retest it here, then we're going to be riding it for a bullish move. But that didn't happen, you know. So for the sake of this week, since the market is coming here, if this happens, so quickly, I could just readjust this to this, please remove this guy. It's not necessary again. Remove this guy, it's no longer valid. So this guy is still valid. If it comes to give us a retest here, using the 15-minute time frame, then we're going to be riding it for a bullish move all the way to this place, all the way to this place, all the way to this place. So you just take a look at this. If it comes here, of course, wait for your entry pattern. Don't forget, check your entry pattern. If your entry pattern aligns with the move of the market at that particular point in time, just hit it, and expect the market to move to this level. But if that doesn't happen, just keep calm and watch those other two trades. If you just pick either of that two trades that I give you already, gold or Euro USD, you've made your money for the week already. Just hold on to one, hit it, follow your risk to reward ratio, follow your risk management plan, and then follow your trading style. Don't forsake your trading style for anything. Follow your trading style, follow your risk to reward, your risk management system, and it will pay you real good. So that's that about that for now for the week of for the second week of February. With respect to our weekly outlook, this is what I'm expecting to have from the market. And if all of these confluences align with what is it I'm expecting, if all of these align with my confluences, boom, I'm hitting the market from there. So if there is anything you want to hear from me, just hit me on my email, trueworld.com. Bye for now. Enjoy yourself for the week, and I wish you more blues than red. Bye. Coach Shedrach here now.